Hi all, welcome to another video. In today's video, I will take you through my portfolio mistakes, the companies that gave me negative returns, and the learnings that I had from those mistakes. I'll share my screen and explain in detail what exactly happened and what kind of learning that I had from those negative returns and from those losses that I had. So I'll share my screen and let's dive into it. Okay, let me take you through the screener website to learn about my portfolio mistakes. And the first stock is Yes Bank. Let me open Yes Bank's details. So just to give you a context, during 2019 end and 2020 beginning, Yes Bank had gone through some rough patch. There was an issue with their management, and the stock price crashed from a high of 380 to 392, either sub 15 in that level. So as you know, I entered stock market on 2020 June, and the stock was trading around 28, 26 in that range. And at the same time, SBI has acquired a part of Yes Bank, basically just to help them to recover from the issues. So what I thought was, since SBI S Bank has SBI's backing, let me invest some money into S Bank because already the stock is under immense pressure, and going forward it will pick up. In that thought process, I invested in Yes Bank, started investing at a price of 26, then 25. I invested throughout, I think, 3-4 months. But as you can see that the stock kept falling from 26.75 on 26th June. Within 1 month, 2 months, August, it reached 14. Again, it kept falling. September, October, it became 13. Right? So I kept on increasing, and my average price came to around 15 or 16 in that range. Then I stopped, and just hovering around in that same range. If you see 2021 February, again 16, 15. I what I understood is that it will take time to recover. And there is no point in holding onto a stock where you have no idea how long it will take to recover. So due to some reason, I sold the entire stock on, I think, by June. Yeah, my selling price was around 13.5 or 13.6. Within 1 year, I sold my entire Yes Bank portion with a loss of 11%. And when I look back, it was a good decision. As you can see, after that, the stock had not gone anywhere, right? I'm talking about from 2021 June till today. If you see, maximum it went is around 28 or so. But still, even after that, it is just hovering around that range. And I lost my conviction, I would say, and I sold with a loss of 11%. And the primary learning that I had from this investment is, everyone says never buy a falling knife, right? If you are buying from here because the stock is falling, you kept on averaging, the stock kept on falling, right? That's exactly what I did. I started buying at a price of 26. It reduced to 25, 20, 19, 13. I kept on buying, kept on adding, kept on averaging, right? But after a point of time, it plateaued. There is no rise. So never buy a falling knife. The famous quote, uh, famous stock market investors used to say. I learned that in a very, painful way. Now let me let me take you through the second stock that gave me negative return, which is Relaxo. Again, I am opening the Relaxo's stock page in Screener. I will filter down 5-year period price. So if you see, I started investing in Relaxo from May 2022. You can see it over here, right? The price is around 1071. So again, same here. The thought process behind buying Relaxo is that they are a very good player in footwear industry, and they were giving good results up until that point. And also, I was using their product Sparks Chappal, right? So I am pretty much impressed by the product, and I found the company is also good, doing well. But what happened was, when I started buying, if you see, from 1080, let me open PE ratio. The PE was more than 100. That means it is very highly overvalued company at that point of time. But again, let me open price. I kept on averaging Relaxo throughout 2022, and my average price came around 1037. I invested around 145 stocks, as you can see, for an average price of 1.5 lakh, right? But later on, what you can see is a consistent fall of Relaxo's stock price. And the reason is very simple: they are not giving good results. If you let me go to the quarter-on-quarter results, if you see after 2022, it's it went to a high of 765 crores in revenue and 63 crores in net profit. After that, it's just stagnant, and after a point of time it started reducing also. And because the company is anyway overvalued, the stock price kept falling, and though the price kept on falling, there was no change in valuation because the net profit is also reducing, right? And what I realized is that there is no sudden change that's going to happen in Relaxo's case. So I exited all my investments by May 2024 within 2 years at an average price of 822. That resulted in a loss of around 30%. But if you see, after that, from 822, the stock had fallen to 440 level, another 50%, I would say, another 45-50% it had fallen. 50%, yeah, more than 50%. So looking back, it was a good decision to exit at 30% loss at rupees 820 or so, right? And I don't know how long it will take for the company to recover, because right now I can't see any improvement in their sales or net profit. So let's see how things are panning out in Relaxo's case. And the third stock is Wipro. So I started investing in Wipro. Again, I will open 5-year stock chart. I started investing in Wipro from July 2020. Started with an average price of 135 or so. And the company was doing great because of work from home, and they are having good business, and it reflected in their P&L, profit and loss statement, and in the stock price as well. The stock kept on increasing, but what I did was I kept on averaging month after month, right? Without, again, here also, just like Relaxo, the issue was valuation. I was not checking where exactly the valuation is going, as the stock price is increasing, started increasing, you can see the PE ratio also started increasing from 20 in 2020. It increased to 23, 25. Again, it increased to 28. It touched a PE ratio of 32. But if you see the 5-year median PE, it was around 22, right? But the stock was trading at a valuation of 32 during October 2021. And the price also reached the maximum level of 350, right? I continued investing. I continued averaging. It's like I was doing a SIP in Wipro. And later on, the company struggled to maintain that kind of performance, and it affected the stock price also. It kept on falling. You see, by July 2022, it reached 196. Again, it reduced to 190, 182 levels. So the stock performed here nicely. All those gains were taken away, right? And I stopped investing with an average price of around 240, 245 range, and I exited my entire holdings in between March and April in 2024 with an approximately same range. If you see the price in March 2024 is 243 to 45 range. So basically within 4 years I did not get any returns. I did not go in loss, but I exited the position with a break even. I exited because the companies started performing well, but I was in need of money, so I had to exit. But the greatest or the biggest learning over here is if the valuation is kept on increasing, if the stock price is kept on increasing, I would say don't average. Let the stock go and wait for it to settle down. So investing in Wipro at a valuation of 32 or even at 28 is not a good decision. That's what I learned. Because if you take even the 10-year PE ratio average, the median PE is 18.7, right? So currently the stock is trading at a PE ratio of 20, which is fair, I would say. But anything above 25, uh, right now I won't invest, right? So that's the biggest learning in case of Wipro. And the last stock is Happiest Minds. It is quite recent. It happened last year. So I was tracking the company from some time, and over here what happened was I invested in Happiest Mind at a range of when the stock was at a range of 810 to 815 in May last year. And to my surprise, the stock has rallied to 906. Actually, it was much more than that. It's not reflecting it over here properly. It went to 940, 950 level by June. So I was sitting at a good profit. But what happened after was a big surprise. If you see the big volume spike on 28 June, the promoter of the company sold around 6% of his stake in Happiest Minds. And because of that, the stock crashed to 820 level on 28th, 29th of June, right? And after that, there is no looking back. The stock kept on falling, 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 right? Let me open 1 year graph also. From 810 levels, it kept falling, and the fall is primarily attributed to the bad results that the company is giving. Though the sales are consistently increasing, it's not reflecting in the net profit, right? Their margin is reducing. Over here, if you see 20 from 20% operating profit margin, it reduced to 18, 18 and 15, right? So the net profit consistently reduced, and it badly impacted the stock price. And I understood that there is, again, I waited 2-3 quarters to see if there is any turnaround, but I couldn't find anything, and I exited the stock at around 700 level. From 812 I exited at this year, February. I exited at around 700 level for a loss of 11%. And again, over here, if you see, after my exit, the stock had fallen again, right? It reached a level of 543 in April 2025. And right now it's again trying to come back, but still it is hovering around 600 range. But I lost my conviction in the stock and I exited. Okay, so these are the learnings from my stock pickings, my portfolio mistakes. Primarily, number one is never buy a falling knife. If the stock is falling, there must be a reason for that. So never average such stock. Point number two is never buy a stock, however good the business model is, if the valuation is so high. And point number three, if the stock price is increasing and correspondingly the valuation is also increasing, it's always ideal to wait for some time for the stock to settle down and the valuation to come to its median. After that, consider buying. And point number four is, again, it's related to valuation, management of the company, performance of the company, and the right time to exit if there is no improvement in the quarterly results. That's what happened with Happiest Minds, where the company's sales is increasing, but there is no improvement in its net profit, and the stock price kept on falling, and there is no direction that the company is giving on when there will be a improvement in its profit corresponding to its sales growth. So yeah, I hope you learned something valuable in this video. It was a good experience for me also to take to share the screen and explain those analysis. And if you are liking my content, consider subscribing to this channel. So I just started putting content around stock market, and I will be coming up with more such content in future as well. So yeah, that's all about today's video. Until the next video, take care. Bye bye.